All right, so by now I'm sure you've read a million news articles and analyst reports on what's happening between the U.S. and Venezuela. I will try to keep this mostly focused on some data that I think is interesting, and that's going to be historical U.S. imports of Venezuelan crude, and we'll look at those destinations and how those have trended over the last decade. So we'll be using EIA's company level imports data set, which is a really nice data set. If you ever have a chance to get your hands on it, I've kind of grouped things that will make this hopefully easy to understand, and it'll be a good learning situation. My takes on Venezuela and the U.S. I'm not an expert in Venezuela. I've obviously kept up with it over the 10 years that I've been in the oil markets and analyzing things, so I know a little bit. But I wouldn't expect. I was surprised to see the Canadian names down significantly this morning, both on the midstream and upstream side. I just don't think there's, in my opinion, a super bullish production scenario for Venezuela in the short term, potentially in the medium term. But I still think it's tough with all the political risk there. It's tough with the political risk in the U.S., where you get a new Congress in a year, you potentially get a very different administration in 3 years, depending on how that plays out. Who knows how committed they'll be to Venezuela. So in a scenario where there's just a lot of political risk on the table on both countries' sides, I think it's going to be tough to convince oil companies to invest billions in Venezuela. So that's my take on it. Maybe I'll have a couple more takes as we go over the data. But with that said, I'm going to toggle between our tool here, which is our mapping tool. It shows the pipelines that you guys have seen me play with before. And then also some slides I made that show the data. But first, let's talk about the flows. And again, we're going to be talking about the last 10 years of imports of Venezuelan crude through the U.S. So here's Venezuela here. Really 6 Gulf destinations. And then we have a West Coast and East Coast kind of destination of where this crude's going. So let's tackle the Gulf first. So really one of the major routes here is up to Pascagoula. This is a Chevron refinery here. So I'm sure, as a lot of you now know, Chevron's a player down here. They're moving a lot of their Venezuelan crude up to this Pascagoula refinery in Mississippi. Also, Venezuelan crude's coming up here to these New Orleans area refineries. In the analysis and the data that we'll be showing, I bucketed the New Orleans and the southern Louisiana refineries into the New Orleans bucket. I've also bucketed like the Baton Rouge refineries here. Those don't take a lot of Venezuelan crude, but there's a little bit that has gone in there historically. I bucketed those with New Orleans as well. Third Gulf destination is the Lake Charles area. Fourth is going to be the Port Arthur area here. Fifth is the Houston area, so the big refining area here. That includes Sweeney, which is this refinery here to the south. And then the last and sixth Gulf location is Corpus Christi that we'll talk about and look at the data as. I mentioned before, there is a chunk of barrels, not a ton, but a lot, that goes up here into the Northeast and feeds some of these Northeast refineries in the U.S. And a very small amount, I think I'm going to miss it, but goes to the Panama Canal, has historically either gone around the Horn in South America or through the Panama Canal and fed some West Coast refineries. This is very little, and it was back in time. So this is not a major route. The major route is mostly here, coming to the Gulf Coast. So let's take a look, and we'll toggle. Let me clear this out, and we'll toggle over to the slides. So the slide you see here, the bars are going to be the destination of where the Venezuelan crude imports are coming in from. And then the line graph is going to be overall Venezuela production. And this is not on the same axis. I have a secondary axis. So the axis on the left that you see here are the import numbers, and this is in barrels per day. The right side axis is going to be Venezuela production overall. So again, I think most people know Venezuelan production really fell off a cliff, going from 2.5 almost million barrels a day 10 years ago down to bottoming out at under 500,000 barrels a day, really around COVID times or 2020. I would note that production has come back quite a bit over the last 5 years. So you've gone from under 500,000 barrels a day to nearly 1 million barrels a day now. And then you can see how the imports have recovered a little bit. So this huge gap here, a function of kind of the embargo the U.S. had on oil coming from Venezuela, so not allowing anyone to take Venezuelan oil. The natural production declines of Venezuela didn't allow as much oil to be imported to the U.S. So that's what you see here. But this is mostly embargo reasons for this gap here of just really no Venezuelan imports. So if we look at the actual graph and look at the actual chunks of the bar graph, you can see kind of the destinations. It's a bit of an even split back in history, or not super chunky. There's a decent even split between the destinations. So you have Corpus Christi taking a chunk in the blue here. The orange is going to be the Port Arthur area. The blue is going to be the Houston area. You can see the West Coast, the little dark greens here, just a little bit here and there, not much. Lake Charles in the purple. The light green here is New Orleans. The blue is Pascagoula, and then the kind of maroon is the East Coast imports. So back in time, a healthy dose of imports coming in from Venezuela. Let's call it 700,000 barrels a day for 2016, 2017. As a reminder, back then the U.S. Was refining about 16 to 17 million barrels a day, so a decent chunk of our imports, feeding mostly those Gulf Coast refineries. Really nothing getting up into Pad 2 that I've seen back in this time frame. This was feeding mostly the Gulf Coast refineries and staying in the Gulf Coast. What we see today, we have seen some of the imports come back. That's going to be, obviously, you can tell by the graph, much lower amounts. So looking at really 200 to 300,000 barrels a day at best more recently. So you have Corpus Christi taking a little bit, Port Arthur taking a little bit, Houston taking a little bit, and then the New Orleans area and Pascagoula still taking a little bit, and the East Coast is still taking some as well. So that's a good view of the last decade of what the imports have looked like. One of the narratives that I heard this morning, which I think is probably a little bit overblown and led to some of the Canadian names being down as much as they were, is the increase in Venezuelan production is going to cause more barrels to come to the Gulf Coast and compete with those Canadian barrels. That undoubtedly is likely true, but I would note that that's been happening for 5 years now. So we bottomed out in 2020. Venezuelan production has come up quite a bit since then. Let's call it 600,000 barrels a day. Imports have come into the U.S. Versus 2020, 2021, and the market's been able to handle those. At the same time, Canadian production and Canadian movements down to the Gulf Coast have increased significantly over this same time frame. So the market is able to handle these barrels, and I do think as long as it doesn't happen in a very short period of time, the growth in Venezuelan production, let's say over the next 5 years, I don't think it'll be huge. So I think the market can easily handle hundreds of thousands of barrels a day of new Venezuelan crude coming into the market and hitting the water. Now, not all of it's going to go to the Gulf Coast. Some of it will go to China. Some of it will go to other areas. And it will have an impact on the price Canadians get for their crude, right? So you have more heavy barrels available in the market is going to lower oil prices of heavy barrels overall, all else equal. So I don't think it certainly could be a headwind for the Canadians. Certainly not something that I think was justified with some of the action I saw this morning. Again, my opinion, take it as a grain of salt. I don't think we'll have massive amounts of Venezuelan production coming online in the short or medium term. Certainly some low-hanging fruit there where they can increase production, but I don't think it's going to significantly impact what Canada does, the production that Canada, the growth that Canada plans over the next 5 years. I don't see a big change there. So we'll toggle to the next one. Again, these are the areas where these barrels were going to. Next, we'll look at the actual companies that were importing these barrels. So not a huge surprise, back in time, Citgo was taking a lot of the Venezuelan barrels. That's the dark blue here. You'll see Valero took a lot of barrels back before the kind of the embargo in 2019, 2020. Chevron taking quite a few, Phillips 66, and then a smattering of other folks. Post-embargo, or I guess there's an embargo still on, but recently with some of the imports coming back, Valero is kind of the big name that's taking most of the crude, and then Chevron, and this is basically all going to that Chevron Pascagoula refinery that we talked about earlier. And then again, you have a smattering of other folks taking a little bit, but really the players today taking Venezuela imports, Valero across a lot of their Gulf Coast systems are taking them, and we'll dive into the specific areas here in a minute. As well as Chevron at their Pascagoula refinery, and then again a mix of other folks taking some of those barrels. So let's dive into the actual specific areas, and then we'll talk about the West Coast first. Again, these aren't terribly material amounts that we're going to the West Coast, but you can see who was taking those, mostly Chevron to the West Coast, and mostly back in the 2016 to 2019 timeframe. And we're talking about a sporadic amount of 10 to 20,000 barrel a day months. So really not much going to the West Coast. Shifting over to Corpus Christi. Corpus Christi, back in time. Again, this is Citgo has a refinery in Corpus Christi. They were taking a chunk of those barrels, quite a few of those Venezuelan barrels back in time, with Valero taking the balance. Currently, and you'll see this as a theme, across some of these areas and most of these areas that we're going to show, Valero's still taking quite a bit of Venezuela crude. Citgo's actually not taking any more. So Citgo's refineries along the Gulf Coast are in Lake Charles and Corpus Christi. Those refineries, at least based on the EIA data, are not taking Venezuelan crude anymore, which is interesting. Shifting over to Houston. You take a look at Phillips 66, so this is going to be the Sweeney refinery back in time, taking quite a bit there. A little bit of mix with Houston refining, which I believe has now been shuttered, not online anymore. And then more recent times, we're looking at the Sweeney refinery is taking most of the Venezuelan crude in the Houston area. I should mention the Houston area includes like Texas City, the Galveston area, so I bucketed those together as well. Shifting to Port Arthur, up the coast a little bit, you see Valero. Again, the theme, Valero still taking a lot of Venezuelan crude, took a lot of Venezuelan crude in the past. Motiva was taking some of Venezuelan crude in the past, not anymore. And then Total's refinery in Port Arthur was taking some in the past, but no longer anymore recently. Lake Charles, so the refineries here. Primarily Citgo, Phillips 66, and then there's another third-party refinery in the area. Back in time, Citgo, again, not taking it anymore, and really nothing coming into Lake Charles for Venezuelan imports, nothing material these days. Further down the line in Louisiana, this is the bucket of New Orleans facilities. You're looking at Marathon back in time taking some, but really, again, Valero's the big piece, and then I'm sure I'll mispronounce this, Calmet refining taking some. Calmet and Valero still taking some today. Pascagoula is just Chevron. It's just the one refinery there. You can see, obviously, they're taking advantage of some of their vertical integration with their upstream piece in Venezuela, shipping those barrels to Pascagoula. I think I saw today that a ship just left today, Venezuela, a Chevron ship heading to Pascagoula. So there you go. There's some barrels on the way to the Pascagoula refinery for Chevron. And then finally, the East Coast taking some. This Axion refinery, I believe, shut down in 2017, so that's no longer in service. So really, you just have the PBF refineries taking some of the Venezuelan imports more recently. So that sums things up. Hopefully that was quick enough for everyone. We'll go back to this main page. I hope that was informative. Again, I think I gave my takes. The only other thing I would say is quite a bit of instability probably in that country right now. I don't think the market's maybe thinking about a potential bearish near-term scenario, which could happen depending on what happens in that country over the next couple weeks or months. So something to think about there as well. I think most of the focus and most of the upside is based on a bullish production scenario in Venezuela over the medium term. I do think that there's a case to be made that things could be very unstable there, and you could actually see a bearish production scenario in Venezuela over the short and medium term. So we'll see what happens. Thanks for joining. Reach out if you have questions. I try to get on a more weekly schedule with these videos, slacking a little bit. But please reach out to us. We're happy to answer questions. Yeah, have a great day.